You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back once again for Volatility Views, the premier program for volatility traders. And I say once again, but this is our first episode, our first show back for the new year. Hope you had a great 2023 trading and from every other perspective, and hope you had a great holiday season as we're kicking off the new year here in grand style. Also, hope you had a chance to check out. There were no live shows for the end of last week, but we did put out some content for you. Managed to get you guys a fun look back, see if anyone won the Vol Prize for 2023. Spoiler alert, no. We had a lot of guesses, but we had a crazy range for VIX last year. We'll get into all that fun in a little bit. But yeah, a lot of you playing for the 2024 Vol Prize. So I think just statistically, someone's got to get in there. So we shall see out there. A lot of fun to be had. My name, of course, Mark Longo from the THE optionsinsider.com, as well as from the network upon which so many of you are out there mainlining these days. 2023. Yet again, the biggest year in the history of our network. We have all you folks out there to thank for driving up our bandwidth bills yet again. Just kidding. It's a good problem to have out there. Remember, if you like what you hear of this show, anything else we do on the network, throw a like, a star, a comment, whatever your platform lets you do. They all let you do different stuff. And all of it in aggregate helps new people continue to discover the content. Here we are kicking off the new year with a little bit of red on the screen, some vol maybe peeking its head back up. People wanted to learn about vol. Help them beat a path to our door. Leave that rating, that comment. And then, of course, if you want to turn your vol trading, just your trading in general, up to 11, theoptionsinsider.com/pro. Congratulations to Roddy, our winner of our December Pro Trading Crate out there this year. You want to get your name in the hat for the January one. You want to, of course, get options oddities after this program. The first options oddities of the new year. What wild, crazy trades will we have in store for you? I guess you got to tune in to find out. Plus, great pro Q&As. The meatball was just on me. He wants to come back on the pro Q&A to do a pro Q&A all about all things 0 day. So we'll see if we can squeeze him in there and a whole bunch of other fun stuff. Vol is definitely a recurring theme of our pro Q&A session. So if you're interested in volatility and you're listening to this show, I have to imagine you are, then you should be checking out the pro, theoptionsinsider.com/pro, the place to go to learn more as we go around the horn and see who's joining us for this first episode of the new year. Let's go out first to the dark and stormy, the hellacious shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. How was the new year on the shores of Maine, sir?
It was nice. I actually went to a friend's house and we fired machine guns.
Well, that's not just the most shores of Maine thing. Just firing machine guns. We do that all the time in downtown Chicago. It's a little bit different connotation, though. But glad to see you had some fun there. Were you shooting at the clam pirates at least?
We were not. We were not shooting at the clam pirates. You come to the point where you need those clam pirates. You need them.
Oh, are they a vital part of the local ecosystem, the clam pirates?
They are. They are.
That money they steal, that goes back into the local economy. So at the end of the day, you can't shoot them all. Just a few to make an example. That's what you got to do.
Something like that, yes.
And also joining us on the first episode of the new year. What better way to kick it off than with our old friend, the once future and now present, yes, he does have the paper to prove it, Dr. VVIX, Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show. How goes the new year for you, sir?
The new year is going well so far. First off, when you hear a new word and you learn a new word and then you hear it 3 or 4 times, you guys know as we were getting ready to kick off, my wife poked her head in here and was trying to ask me something. She specifically was asking me if over spring break I want to go shoot off machine guns. I kid you not. That is exactly what she was asking. I was like, I can't talk about that right now. So
that's the kind of thing
I guess that's a sign that I need to cough up the $500 and go shoot some machine guns out in Arizona.
Wow, I guess this is the show for machine guns and volatility. I
think I was talking about bombs or something last time, but no, I'm here. I'm excited to be here. I'm excited to be with you guys. My days with EQ derivatives came to an end over the weekend, which was a planned departure, and now I haven't come up with a cool title for myself yet, but I'm doing nothing but listed derivative research. And I'm helping some exchange with it, and which means I'll talk about VIX in 2024 till I'm blue in the face.
Man About Town continues out there in the land of vol. By the way, if you're listening live, listeners, if I do sound a little bit different, I am still here in the Southern studio through the middle of next week. I do believe by the time Vol Views rolls around next week, I will be back in the Chi-Town studios as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. This is usually the portion of the show where we look back on the week that was and indeed still is from a vol trading and trending and analysis perspective. And we are going to do that in a couple of minutes, but because it is our first show, our kickoff show, if you will, for the new year, I thought we'd look back a little bit farther because we finally have the numbers for the full year of last year. And one of the reasons why I think people struggled in our 2023 Vol Prize is that we just had quite the interesting year on the vol front. People forget that we kicked off the year actually right around a 23. That's where we came into the year last year. So vol was comparatively elevated, all things considered out there. And then we had a nice little trajectory. Remember, the markets rallied earlier in the year through the early February. February 2nd was actually the apex for a lot of names out there in the market that aren't the Magnificent Seven. So vol came off early. Then, of course, heading into March, what happened, right? We had the contagion fears, and all of a sudden, market was selling off. Vol started not just creeping up, vol was popping. We got back over a 30 handle ever so briefly. The high was 30.81 right in mid-March, right in the height of that contagion fear season. And then that was pretty much all she wrote for the highs for VIX for the year. We never really kissed a 30 or even sniffed a 30 handle again for the rest of the year. Something for those of you who were playing along and guessing in our vol for the end of the year, and also our buddy Jim Carroll's piggyback poll. He had folks guess the high for the year. A lot of you folks were guessing some banger highs. Just bear in mind, we barely kissed 30 last year. It's not something we blow through all the time. We've all seen VIX go to 80, so we have that in the back of our brain that it could do that at any time. But in reality, not so much. The low came about when you would expect it in the seasonal point in mid-December of 1181, so just shy of the 12 handle. Also, Interestingly enough, exactly a 19-point range for VIX on the year. 3081 on the high side, 1181 on the dark side. So again, a 19-point range, that's pretty wide. That's another reason why so many folks had a hard time hitting that bullseye in our VIX crystal ball game. If we hang out here for the entirety of 2024 and we close at 13.5 or 12.55 or something like that, I guarantee you we'll have a lot of people fighting for that vol price this year. But 19-point range, you got a little bit more going on out there. And then, of course, we closed at the end of the year. The question we asked a lot of you, which none of you got even close to really for the crystal ball this year, was 1245. That was the magic number for where VIX cash closed on the year. So again, a little over 10.5 points to the dark side from the open to the close on the year from a vol perspective. You folks were fairly prescient when we asked you guys and gals at the end of last year, beginning of December. We said, hey, final month of the year, break out your crystal ball. Where do you think VIX is going to close for the year? 42.9% of you chose the 12 to 13.5 range. That is, of course, where we ended up closing. So with 1 month to go, with 1 month to go, I should say, with 1 month to go, your crystal balls were fairly precise. Again, a lot of you were just guessing where VIX was at that time as well. So a little bit of recency bias baked in there as well. 22.4% guessed above 15. We got there briefly, then it kind of fell off. 13.5 to 14, 18.4%. And then below 12, those of you who were betting on a quiet end to the year, 16.3%. So you folks were fairly prescient with 1 month to go. Now, if we dial that crystal ball all the way back to a year ago, to the end of 2022, when you folks had to guess for a year, got a little bit more challenging. Also interesting to see what our ranges were a year ago. Remember, VIX was a lot higher then. So our ranges a year ago, we gave you explosive above 26, which again, we only got above a few times this year, or juicy 21 to 25.99, or mildly frothy 16 to about a 21, or snooze fest, as we put it, which is below 16. That obviously turned out to be the right answer, but the one you folks chose was mildly frothy, 16 to roughly 21, 33.9% of you choosing that. So your longer term crystal balls, a little bit less accurate, which again is probably why we had no winner for the, once we kept expanding it, we could do our usual 1/10 of a point and no one was even close to that. Then we expanded it to 2/10 of a point, then a third, then we got beyond I think the closest was like 0.78 or something like that. So once it gets beyond a half a point, you're kind of getting crazy. So we want to have some degree of precision. We demand 1/10 of a point for us here every week. We think the least we can do is ask for something within a half a point for you folks out there for the year. Juicy, 21 to 26 got 25% of the vote. Explosive, so nearly a quarter of you, 24.2%, were expecting VIX to close above 26 for the year, which again, is pretty frothy. And then Snooze Fest, the actual right answer, only got 16.9% of the vote. So a lot of interesting stuff. Really quickly, let's run down what you folks had in your crystal balls in terms of our guest hosts on the network. Russell was at a 1697, so he wasn't terrible. He wasn't within our margin of victory by any means, but he might have been one of the closer ones. We had Mr. Dan Passarelli from Boot Camp, 22.5, so no joy there. The Rock Lobster was at a 1688, so you and Russell were eerily close to each other. I'm guessing you both guessed on the same show last year, and that's why you were so close. Our buddy Mr. Matt from Orats was at an 18.5. The Meatball doing his palindromic backward nonsense. Instead of 1881, he did 1818. Either way, it didn't work out. And myself, I was at a 2135, so I was feeling a little bit more robust end of the year than we got as well. So yeah, no one on the show, on the network, got it right either, listeners. So it was just a rough year for everyone. That said, let's go around the horn. Mr. Rhodes, as you look back on the mad year that was 2023, what stands out to you from an overall vol perspective, sir?
Well, I think it'll be a great teaching example as long as I'm still around of coming into a year where everybody's very concerned and seeing how even some of the sell-offs and we did get a couple of decent sell-offs in 2023, if I remember correctly, but VIX didn't act like it was supposed to. Well, it didn't act like it was supposed to because a lot of people were braced for a difficult year and a more difficult year than we actually got. And the same thing happened going into, I want to say 2022 or 2021, one of those years where everybody said the bear market's not over until VIX hits 40, and VIX never hit 40. VIX it's a fear index, but I still haven't come up with the best word for this, but I feel like it's a fear plus surprise index. If you're being lulled and all of a sudden the market sells off 20%, that's one thing. If you're like, man, stocks are overvalued, there's little regional wars going on, it's just a matter of time before we start shooting with Iran. I'll bet you we have a sell-off this year. I'm going to go buy some S&P puts. Well, if you've already bought the protection, then you don't get the panic reaction. And I feel like the last couple of years, we haven't gotten the panic reaction. That being said, this year is going to be exactly opposite, and I wouldn't be the least bit shocked if we can top 40.
Wow.
Yeah. And by the way, just one quick, I'm always I'm being cautious of stepping on you because you're so far away today. But, I always like to run numbers while you're talking. And I love doing this to you because you get to do it to us all the time. What percentage, we've got 31 years of VIX leading up to 2023, not including last year. What percentage of those years was the high-low spread wider than 19 points? And it was exactly 19 points last year.
That's a good question. I was mulling that over myself when I saw
I know it because I calculated it.
I'm sure you do. Wider than 19 points. That's a good question.
You think it's more or less than half the time?
Oh, less than half the time.
Oh, you're wrong.
More than half the time, the spread is more than 19 points?
Yep. 17 to 31 years. I was shocked at that number too. And like, if I had run that number and it had been like 25%, which is what I would have expected, we wouldn't be talking about it right now.
Yeah, I was going to guess somewhere around a 20 odd percent. That was going to be my guess. Wow.
And in fact, the last, 2020, 2021, and 2022 had wider. And then they're just kind of all mixed in. The longest streak that we have of 20-point widths plus or 19 plus years would be 2007 through 2011. So it has happened 5 years in a row before. But yeah, I think the more recent low VIX stuff has kind of lulled us to the history of what that sucker can do.
Can pop off quite a bit. I did not think we had more than 19-point ranges over half the time. Mr. Once in Future, Mr. Rock Lobster, does that surprise you as it did me? And then what else stands out to you, sir, looking back at the mad year that was 2023 from a vol perspective?
Does what surprise me?
That we had more than a 19-point range over half of the time in VIX history.
A 19-point range in 1 year?
Yes.
That was here. I'll do a little clarity real quick. Sorry, yeah. Andrew. So while Mark was talking, he noted that last year the high-low range was 19 points exactly. So we've got 31 previous years of VIX, and I just pulled the high and the low by year real quick, and then did some math, and I know what percent of observations or of years the range is wider than 19 points, and the number was kind of surprising.
Oh, as far as how many were wider than 19 points? So out of the last 31 years. I would guess, oh my gosh, maybe 20% of the time?
54.8387% of the time.
I'm glad to see you were paying attention so you can embarrass yourself just like me. There we go.
Right.
And it wasn't a question to embarrass you guys. It was
all of my Excel sheets, which I actually trade, to try to make money, and they all just broke for no reason.
Oh,
so
sorry,
I'm talking with my guy at the same time, and I have a guy that helps me with my sheets. One of my students, we do a swap, And anyway, so yeah, I'm in a panic state right now, even though it doesn't sound like it, because all the stuff I used to look at everything just stopped working. Just stopped working, just for no reason. Anyway, that does amaze me. However, you know what? I can throw a stat at you too, which I understand how 19 points, because that would basically be 12 to 37 or 12 and 19, what is that, 31?
Yeah.
So that would be about a 2%, so 32 VIX is like 2%, SPX average per day. And then what was amazing is that SPY has only, or SPX has only sampled less than 2% of a range for the month 4 or 5 times in the last 7 or 8 years. So SPX has moved more than 2%, like 90-something% of the time, 96 or 7% of the time. in the last 8 per month. The total range for the month, high to low. So that the fact that we could see that number does not actually, it kind of makes sense. I'm bringing some kind of supporting. What is surprising is that the range is a lot higher than that more than half the time.
Yeah, that's crazy for a product.
It sounds like a little crazy time.
They argue that the long-term average is 20, which I've always disputed. But to say that, and then also it has more than a 19-point range intra-year over half the time. That's a banger product.
Right. I mean, the thing is I think what a lot of people don't understand about VIX is they make the mistake of like vol being low, and then it's a layup just to buy VIX calls or something, and they buy calls and they don't realize they're buying future price when they buy calls, and their calls just die when they go away. And then literally a week later, boom, you get the pop, So I think that could be, people might say, oh, it doesn't move, but you know what? I think a lot of people spend a lot of time trying to sort of pick the bottom in vol, which, doesn't sound like a good phrase. And I think that's part of the problem. Like a lot of the time, the prevailing trade, like you and I know, Mark, from the vol products, like 80% of the time, the prevailing trade is like future melt. So I don't know if that's statistically exactly right. Maybe it's probably more like 75, but like for the most part, like you get melt every day. So if you're always buying VIX calls, you probably think the dang thing never moves, but it does. It also moves down a lot too.
That is the case. But it's also a good point you made there, Russell, as well, about how coming into 2023, that was coming off the tail of 2022, the year where everyone's like, VIX is broken, this product sucks. You're right. People were saying, coming on and saying, we're not going to get, we did polls on this. People and our audience even saying VIX had to hit above 40 before we saw true capitulation. Some people, you're right, were in the 80 camp. I mean, there's all sorts of crazy perceptions floating around out there about VIX, which again is why we have a whole show all about it, listeners. We'll get to some more data as we keep on rolling. Let's get to this week in vol as well, listeners. And again, coming into the start of the show, and again this week, after being in the heels of just over a month of pretty much nonstop straight upside in the equity markets, S&P rallying 600 plus handles from the low around the Fed meeting up until the end of the year, threatening new all-time highs. Everyone was just coming into the new year expecting this largesse of upside to continue endlessly, and we didn't get it so far this week. It's been one of the more downside tinged weeks in a little while, which is freaking people out, which is kind of funny to me, the fact that we rally 600 points, then we give up 50 to 70 of them and people freak out. That just shows how recency bias they are. But coming into the start of the new year, we've had pretty much nothing but green, or excuse me, nothing but red on the screen. We had non-farms today. Weirdly enough, I guess we're back in the good news is good news camp again, because we saw this strong non-farm number, which usually means, hey, they're going to punt a little bit on the rate cuts everybody's excited about. But yet the market was rallying coming into the day. Now it seems like that has pretty much gone away. S&P flat to slightly red on the day, Dow off about a quarter, and the NASDAQ roughly flat. When we kick things off, VIX cash is at about a 13.5, puts it up about a quarter of a point. Again, going back a couple of weeks now from our last show. There was no show last week. And the VVIX at about a 90. So starting to get a little frothy again, up 4 points from where it was this time last week. Let's go around the horn the opposite way. Let's go out to the land of the rock lobster first. Mr. Rock Lobster kicking off the new year with a little bit of red on the screen. What is catching your eye out there in the vol markets this week?
You know what? I thought, we're still like at a relatively low volatility state for SPX. 30-day vol is like around 8.9%, which is actually, strangely enough, the lowest it's been in a couple of years right now. No surprise, because we had that straight up rally. It kind of just ground higher. So another thing I saw today is, like, at least this morning, VXX was pretty much at its lowest price. So that's like all the forward vols, the way the forward vol sets up, all the futures, how they're all set. It was like the lowest price it's been in months and months and months. So this morning we got to basically the futures. I think the Jan future is 1406 and it stopped. It's almost like a notice went out all the time. It's like VXX has hit the low of the year and it will not go any lower. Vol futures will not go any lower. And the market's rally just stopped dead. Obviously it's not from that, but it was funny. What is it called? The confluence of basically VXX just hit a dead low for the last 30 days, which I believe is the low of the year. And like, it's basically like vol is not going down anymore, even though we're really not, I think, generating like relatively huge moves. It's just, that was it. We weren't going any lower, at least for today. So I thought that was, from an observation point of view, I thought that was kind of interesting. I thought that was kind of interesting overall. That all of a sudden, we just stopped moving, or stopped moving lower when everything was kind of just on sort of autopilot going downward. So I thought that was a bit surprising, that we could get there and then not go anywhere. So I think that was the most surprising. Another thing too is, I don't know if it's the holiday, which I think it probably is because we have one day off, but VIX feels kind of high relative to where the forward vols are, the futures are in this part of the cycle. Like how we obviously we just ran a regression line and kind of did an average of where VIX was, for a certain amount of days, till expiration on just the 30-day cycle. From expiration to the next expiration. And here, so VIX should be so VIX relative to the futures is a little high with how low VIX cash is at this stage of the game. So that's, I thought that was a little odd. So I think there's a little, I would just call it, the market is a little itchy. It feels like the volatility is still a little touchy. It's not ready to embrace like a new lower 12 or sub 12 number, which, is in zone 1 for me. It's the lower quartile. And it just doesn't want to get down there.
All right. And Mr. Rhodes, same question for you, sir. A little bit of a red start to the new year, maybe throwing some people off. They don't know what this color is. They haven't seen it in so long. What is this red color? What's catching your eye out there from a vol perspective this week, sir?
Well, a lot of people feel like this year was priced to perfection, already with the rally that we got in December. We got, catch up from some of the smaller companies that weren't the thing that everybody kept saying were driving stock prices last year with the Magnificent Seven and all that crap. But you had a lot of people either scratching their heads or being very cautious coming into this year. And I think that's it showed up through the price action so far. That hasn't been, it hasn't been dramatically lower. It's just been a lot of back and forth and aimlessness with a little bit of a grind to the downside. And the price action that we're seeing this week probably doesn't justify, where we see the VIX futures going forward. So I think people are braced for it. Maybe they're a little bit braced for it this year. Not as much as they have been in the past, but I'm not overly shocked at the price action. I am kind of shocked at the back and forth we got today out of the employment number. Right off the bat, I thought that was a bad number for the markets. And, maybe just my book is so stuck in my head, I automatically think everything's bad. I don't know.
Yeah. Apparently this morning we were in the good news is good news camp again. Then it became good news is bad news. I can't keep track of which mode we're in because you're right. To me, I saw that. I was like, oh, here we go. Back to the downside. Forget about those rate cuts for a while. And then the market's rallying. So, Craig, speaking of doubting statistics, Mr. Rhodes, our chat is coming in, backing up me and the Rock Lobster. We have Options Queen saying, I never would have guessed VIX has a greater 15-point range over half the time. No way. Option God saying, man, that stat really surprised me, just like Mark and Andrew. This is my favorite. Nichols wants to know, is Russell smoking crack again?
No, I'm not on the crack. Crack is whack. I love it. I love
our chat accusing you of smoking crack with that statistic.
Dude, that's somebody who knows me from back in the day.
Put that in your pipe and smoke
that
it.
Is. I am putting it in my pipe and smoking it. It's Friday.
That was pretty funny. That brought a smile to my face.
I'm about to tweet out a picture of the annual range with a couple other things on it, just so you guys can see what I'm looking at here.
There's lies, there's damn lies, there's statistics, and then there's Russell.
Yeah, and you didn't share it. I put it in the chat amongst the three of us because I didn't want to hijack the whole program with this topic, but the average is over 25.
Well, again,
average.
The average high to low spread is higher than 25. Now, keep in mind, 2008 and 2020 and 2020.
Yeah, you take like those 3 data points out of that chart. It's a very different number.
Yeah, but there's a whole bunch wider than 30. I'm looking at 1, 2, 3, 4, 5, 6, 7, 8. Geez, like a third of them are wider than 30.
Wow,
just wait till you guys see these numbers. It's so exciting.
That's why we love this show.
It's Andrew so and I have been
talking vol for years, and we could still have these crazy curveballs thrown at us.
Well, wouldn't that be part of like Chris Sedile, who's Ambrose? He's one of his gigs is like, hey, listen, everybody, these tails can get real underpriced because when things fly, they fly. So this is the one stat he doesn't share because it'll ruin his whole tail gig. But anyway. But yeah, Russell needs a T-shirt that says Russell gives good stats.
Yes, or we have one that says Dr. VIX is smoking crack, or somewhere along those lines. We'll find a couple. We'll cut you in on the deal, Mr. Rhodes, out there as we keep on rolling. Let's roll on out to the future side, pun intended. I already talked about the OCC numbers for the year. Spoiler alert: another blowout year for the options market. 11.1 billion contracts. I mean, these are bonkers volume numbers that a few years ago, when the industry was hovering around 3.5, 4 billion, this seemed like just nonsense talk. And yet here we are a few years later, blowing through. 10 billion was crazy town a year ago. Now we're at 11.1 billion. A year-to-date ADV, 44.4 million contracts going up a day, listeners. That was more than the entire industry not that long ago. Rock Lobster, when he was eating his burritos on the P Coast, man, they would give their right arm to sniff 44 million contracts. It was just not a thing. So, yeah, just a crazy town out there. Interestingly enough, equity options, not where the fun is this past year. Pretty much unched year over year. The growth came really in ETF options, 11.6%, and then 33.1% growth for index op. I wonder what could be driving all that, listeners. I have no idea. Obviously, you're starting from a lower baseline with index options, but still, that's where the growth is coming from. Also, not getting a lot of growth relevant to this show again on the futures front. We had 55.1 million contracts going up last year, or I should say 2022, and 55.8 million going up in 2023. So a 1.3% increase. I'm sure the folks at SIBO and others were hoping the return of products like SVIX would maybe juice up that number a little more. But again, no love for the futures, which translates into today, listeners, coming into the start of the show. We got the Jan future down. But again, if we re-rack this at the end of the show, might be a different story if we continue turning to the dark side right now. The Jan future down about 0.85 from where it was on our last show a couple of weeks ago. The Feb future giving up over a point, 1.17 points as we're coming into the start of the show. So that front portion of the curve getting a little bit of a drubbing. Mr. Rock Lobster, we'll start with you, sir. What's catching your eye in the land of the vol surface?
Again, I thought that we had, you have kind of a regular type of contango. All those vols are setting up normally, but VIX cash is a little high. And I think maybe because of the holiday, I'm not quite sure. I always get confused on how I know the holiday makes the futures look artificially low because the forward vols, I think, look lower from the holidays, which I think is what's happening. So you have that kind of anomaly. Remember we had those when the Jan cycle, we had 3 holidays basically before expiration. So I would say that's a little touchy. I was expecting to see the 12 handle today in VIX. if the activity continued, sort of as is. So I'm a little, it would not surprise me if we closed at like 1298 today, VIX. So just to kind of make things look more normal. Doesn't mean it's going to happen, but I think, there's a reason why things have an average. So I think not crazy, but the market is, I think, still in some ways looking for moves that have not quite happened yet. The 30-day straddle in SPX is right around $120. And, in my head, that's like 4,700. We're at 4,700. That's 4,600, 4,800. So the market is not looking for a whole lot outside of that range. It's about 25 handles above each side. So I could still see that straddle compressing to $100. We get kind of tight in the range for the next 3 or 4 days. Maybe that straddle number comes down to about $100, which would put VIX in the 11 handle, I think. So that's, it's sort of, okay, we should be moving, but we're not. And that's kind of what vol feels like to me right now.
Yeah, that's kind of interesting take. Mr. Rhodes, same question for you, sir. Put down the crack pipe for a minute and the machine gun. You got one hand on the crack pipe, one hand on the machine gun. You're a busy guy today. But what's catching your eye out there in the vol surface? And are you surprised that over the course of the past year, VIX futures didn't really catch a bid from a volume perspective?
Yeah, I'm not overly shocked. I thought maybe we would catch a bid toward the end of the year as people became more relaxed about what was going over, but we didn't get the surprise event that you needed. The thing that's surprising me a bit is VIX is down a little bit more than the front month future right now. And you would think if we successfully got that employment number behind us that those two would come closer together. So I'm not, that's the one that's got me scratching my head a little bit. Maybe traders just aren't buying into it, and that's why the Jan future is holding up a bit. We still have a week and a half to settlement on that one. I think that one's January 17th, so that might have something to do with it as well. But yeah, I'm a little surprised at just how much of a premium the near month futures are. But again, I really think we're in for some surprises, at least within the first half of this year. And, I'm always shocked that what I think should be negative for the markets, and I think today's employment number that looked a bit inflationary and, looked like it was like the economy might overheat a bit. That one kind of got me. I thought maybe we would, it would. And it changed the odds of a cut in March down to about 50%, but they've gone back up to around 65% over the course of this day in conjunction with the stock market recovering.
I was surprised at today's reaction as well, but we've seen so many of these, nonsensical reactions at this point that they kind of just roll off me now at this point. But you're right. I was a wee bit surprised to start the day as well. Are you surprised that there's not really a lot of VIX paper going up today, listeners? I'm not. A little bit north of 250,000 contracts right now, 259,000 on the tape to be precise. The ADV reflecting that seasonality of late December coming into the first week of January. Not a lot of folks slinging VIX, as you can see. So the ADV has plummeted 83,000 contracts. It's down to 606,000 right now. Once things get rolling again, that number will pick back up. But this is, again, that seasonally quiet portion of the year. What's lighting it up out there from a size VIX options perspective? Well, let's find out, shall we? Cost you 204,000 contracts to break into the top 10 in VIX options right now. That's nothing to sneeze at. That's respectable. That gets you to the March 47.5s. I've said it before. I'll say it again. That 47.5, the love for that strike, that's my favorite thing out there in the top 10. Oh, maybe second favorite. I have one I'm going to get to in a second. Number 9, 204,000 are the Jan 47.5. So again, nearly 500,000 contracts open on 47.5 strikes across the board. Number 8, 207,000 of the Jan 28s. Again, we're just talking about the range for VIX, right? How often does that 47.5 strike come into play? But I digress. Number 7, 224,000 of the Jan 16s. Number 6, 236,000 of the Jan 18s. Number 5, 255,000 of the Jan 25s. Again, it's all calls all the time, listeners. No puts to be found. Number 4, 265,000 of the Jan 20s. Number 3, an interesting one, which is another one that I kind of highlighted here because we talked about these not too long ago on the show. A few weeks ago, we talked about someone coming in and scooping 100,000 of the Jan 17s for, I think it was around 70 odd cents. We did a poll to see if you folks were down for these. Turns out most of you said sold to you. You didn't want to touch these things. These are still open for size. They are the number 3 position right now, 283,000 of the Jan 17. So the clock is ticking on these bad boys. We were just talking about vol kind of being a bit of a nippy prospect right now. 17s by Jan expiration, they got a bit of an uphill climb, but they are still open for size. Nearly 300,000 of those. Number 2, 326,000 of the Feb 20s, and the number 1 size position out there in VIX options right now. 368,000 of the Jan 26s. So if you think the 17s have a long road to go, allow me to present the Jan 26s. I'll run through really quickly this week because there wasn't a ton of really captivating paper this week. Today, like we said, a little bit north of 250,000 contracts. The big dog today, about 23,000 of the 13 half puts in January, followed by 20,000 of the Jan 15s and 16,000 of the Jan 15 puts. Not a heck of a lot else really lighting it up out there. Yesterday, a little bit more paper, but nothing to write home about again. 448,000 contracts on the tape. Yesterday, the big dog yesterday, 23,000 of the Feb 19s, followed by 16,000 of the Feb 14 puts, and then 15,000 of the April 20 calls, all the way out to April. Now, Wednesday, again, around that 400K level, 398 to be precise. A little bit bigger big dog on Wednesday, though, 41,000 of the Jan 16s. So if the 17's a bit of a bridge too far for you, allow me to present the Jan 16s, listeners, followed by number 2, 22,000 of the Feb 21s, and also 22,000 of the Feb 17s. So do have a little bit of some vertical action going up in February. Certainly looks like it. And on Tuesday, 682,000. That was the big day of the week. Obviously, we were closed on Monday. The big dog on Tuesday, so kicking off the new year, 67,000 of the Jan 16. So it seems like some folks lining up on the 16 strike in Jan as well, followed by number 2, 61,000 of the Jan 30s. Could there be a Jan 1630 vertical? That would be an interesting one. How much are you getting for those Jan 30s? I'm guessing not a lot. Followed by number 3, 51,000 of the April 20s. Those will do all top 5. Number 4, 30,000 of the Feb 18s. And number 5, on the first trading day of the new year, 25,000 of the Jan 26s. We are kind of all over the place. Let's keep on rolling out to Russell's favorite product on the planet, which is SVIX. It seems like it just can't stop hitting all-time highs, even though it's not at 1 right now, but it's looking pretty good. It was at 37.10 when we kicked off the show. Puts it up 2.1 points from our last show. It has since popped to about 37.60 as the show has gone on, so that puts it up about 2.6 points from our last show. So a little bit of action out there in SVIX land, at least from a price perspective. Not a ton of options paper, even though, given the fact that the ADV has fallen to 3,300 contracts, the fact that they put up 4,100 today, nothing to sneeze at. Mr. Rhodes, anything catching your eye out there in the land of your favorite product, SVIX, sir?
Yes, it appears to be putting in a double top at 38. Never use technical analysis with these things.
Is that where you've written all your calls, sir?
Yeah, that's where I've written all my calls. Don't do it. Yeah. No, it's doing what you would expect it to do. It's just kind of grinding higher as long as we don't get that volatility spike. We are in we're in okay contango, which helps that fund out a bit as well. You are starting to see a little bit more activity on the weekly options, which makes me very happy. The weekly options going off the board today, just looking at them, there's probably about 1,000 calls that have traded, and let's just not talk about the puts. They're about 100 or so. So sounds like a lot of people. In fact, the most popular call strike today is the 37s after being the 35s earlier this week. Amazing how that happens as volatility, is inverse volatility products grind higher. Make sure I say that right.
Amazing how that happens indeed. Also amazing are the options holdings for SVIX. They are now hanging out on the Feb 26 strike, listeners, 24,700 of those being held in SVIX's hot little hands coming into the start of the show today, along with their usual mix of Jan and Feb futures out there. So intriguing stuff. Mr. Rock Lobster, anything catching your eye in SVIX, or, and it's been a light week on the VIX options front, but if anything caught your eye out there as well, have at it, sir.
Yeah, so I do like an estimate. I do, of course, my sheets are broken. Everything is broken that I use to do all the stuff that I do. So I'm annoyed. But I had at the beginning of the cycle, I had a top, which is hard to believe. I had an SVIX top in the Jan cycle of 41. Based on like estimated decay. We still have 2 weeks to run for that to happen. VIX would have to get back to like 12 and a quarter or 12.10, and you'd have to kind of savage that February future now that is starting to accumulate. But so I think, I'm still long some 38 and 39s, although I have them for credits at this point. I got rid of half. But I still think those are areas you can see. One of the things about SVIX is when, like, I love trading the product into a pull, and when vol spikes, and then the spike dies kind of, and then I kind of look for those like calls, like the cheap just upside calls. It's a trade that can, I would say, not easily double, but it can move, because all of a sudden when the vol trends, VIX starts to die a little bit. SVIX just boop, 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 shoots up, and it's a cool product to trade on what I would call a post VIX spike. Now there's all kinds of ways to hedge them and stuff like that, but so I don't. Now that was that was an estimate. It was probably generous on the upside, but I mean, I think reasonably, based on like how much decay is still like in the futures, if we do see a 12, we would need to see that next week. Yeah, you can still get to like 40. I think that's certainly possible. So, and that's kind of reflected in the prices, right? So like the 39 call is 60 cents. The 38 call is $1.15. So those guys are pretty good at sort of estimating like, how low VIX can go, which means how high SVIX can go. So they're not dumb. So again, unless we have like a swoon in VIX, the terminal high is probably right around 40 to January 19 expiration. So I would say, yeah, they're definitely fun. To me, it's a more reactive trade. Meaning, market does one thing, and then you're looking for a bounce or to play sort of a rebound with the other. So, but yeah, I have been trading them more, but only 5 to 10 lot size, which is plenty if you want to be a retail trader, as long as you can make money doing that. But that's where I'm living there. But I am trading it more when the opportunity arises, obviously a little bit more.
Indeed, sir. Let's keep on rolling out here. The sibling product for SVIX, of course, UVIX, about 13.75 right now, down about 2.5 points from our last show a few weeks ago. Decent paper there as well, about 8,000 contracts. The ADV is only 11,000, and that's down 1,000 from a couple of weeks ago as well. So UVIX, volume-wise, continuing to not move in the right direction, even though today looking decent. By the way, the size position in UVIX options right now, 2,800 of the Jan 17 halves expiring today. So if you were buying those looking for a pop, you probably having a sad day. Let's hope you overwrote the heck out of those and you're doing all right. And then let's go out, since we're talking UVIX, let's go out to the other product that you folks, for some mystifying reason, well, I get the reason, liquidity, but you guys prefer to UVIX, is UVXY, about 840 right now, down about 0.4 of a point out there. We won't ask the question again whether you like it or not. You guys have clearly spoken. You like UVXY better. The volume numbers back it up. So it's a weird thing. Is it better to have better liquidity at a demonstrably inferior product, or is it better to have a product that decays the way you want it to, but has less liquidity? Again, you guys have spoken. You're going the other way. In terms of volume, the ADV 91,000. So UVXY going the other way, up 11,000. And today's volume right now, also exactly 91,000. So an interesting day out there in UVXY. Mr. Rhodes, anything catching your eye in UVIX or UVXY? And are you surprised that a lot of our audience is still opting for the better liquidity with the neutered product versus the wild unchained product, but worse liquidity?
I am surprised at that one right there. But, my job at SIBO, when everybody thinks it was to teach people stuff, but really it was to get people to trade stuff at SIBO. And behavior changes are hard. I went through that a lot where I'll give you a prime example. Launched a gold VIX and tried to talk to some people about it. And they said, well, it's got a correlation of about 0.9 something with regular VIX. Why the heck would I trade that? So I understand it from that perspective. I really do. I understand sticking with liquidity. Stick with what you know. It took a little while for me to stop trading VXX, but the second they changed SVXY, I quit trading it because it was different. It wasn't going to do what I wanted it to do anymore. So that it's a very hard sell to get people to do something a little bit differently if it's working for them. And if you got people if you're going in and out throughout the day, you definitely want to be in the more liquid of the products. I mean, I don't really day trade SVIX. I buy it and sell calls against it periodically, usually with the intent of having the shares called away or the options expiring with no value, which means I'm not overly worried about the liquidity because I've only got to worry about getting in and not getting out for the most part.
Let's get into VXX, and we can then we get out of here and get into some of the crystal ball because we got some madness there. VXX 15.5 down about half a point. Today's volume looking pretty robust, 70,000, especially when you see that's pretty much in line with the ADV right now, which is about 71,000. And that is indeed up about 5,000 over the past couple of weeks as well. So UVXY and VXX catching a volume bid at least, which is kind of interesting. The big dog position in VXX right now, 11, almost 12,000 of the 15 half puts also expiring today. So right at the money. So they're coming down to the wire out there in VXX. And we're coming down the wire with the show. So I want to get into a little bit of the old crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball. A lot to unpack here. By the way, I think I misspoke earlier. I said you folks favored selling the Jan 17 calls. I just saw the data here. And no, you folks, 51.6% of you wanted to buy those Jan 17 calls for 77 cents. So 48.4% said sold to you. I just have the old school Don Schlesinger sold to you in my head all the time. So you folks wanted to buy those. So I guess you're liking those calls. So nearly 300,000 still open. So we shall see how that one works out. We also have our annual sentiment poll going on right now, which you folks should play along with over there at Options if you haven't done so already. That expires at the end of the week. But what also expired last week, at least on the poll side, and a whole boatload of you folks chimed in on, was our crystal ball for the year, effectively. This is how you register and get your name in the hat for our Vol Prize. We asked you quite simply, where will VIX close at the end of 2024? Gave you 4 ranges as we are wont to do, right around here, so 12 to 16, higher, 16 to 20, spicy, so north of 20, or boring, below 12. And nearly 36% of you, 35.9%, chose the higher range of 16 to 20, 29.5% saying right around here, 12 to 16, 19.6% of you think it's going to be a boring end to the year below 12, and then 15.1% of you came in with spicy, north of 20. So intriguing stuff. Whole bunch of you voting in there. We got well over 1,000 people sending in predictions as well. So hopefully one of you will win the Vol Prize this year. I think my favorite guy might have been he picked VIX at 150 And then he wrote in a minute or two later and saying, that's not enough. VIX of 300. I was like, I'm not sure if you know how this product works, but it brought a smile to my face nonetheless. Speaking of VIX highs and the ranges we were talking about earlier, our buddy Mr. VIXologist, Jim Carroll, been on the show many times. He piggybacked on our poll with a poll of his own. He wanted to know, where do you think VIX will peak in 2024? He also gave you 4 ranges: 25 to 30, 30 to 35, 35 to 40, or north of 40. And north of 40 took it, 40.3%, followed by 28.3% for 25 to 30. 17% chose 35 to 40, and 14.5% chose 30 to 35. So intriguing stuff out there, listeners. Hopefully you folks are playing along. We're going to be nice. The poll has expired for the end of the year vol guesses, but we will accept specific guesses through the end of the weekend. So if you're listening to Vol Views today or tomorrow or even on Sunday, you want to get your specific guess and go ahead, add options on Twitter. You could do it. Questions at theoptionsinsider.com. We're open the hat to all comers. We want everyone to play. Our producers hate it because they have already over 1,000 people they have to track now, but they like it. At the end of the day, it's fun for everybody to play along, and maybe we'll get a winner this year out there on the vol front. Speaking of winners, was there a winner today, listeners? Coming into the end of the show, we had VIX kind of languishing, listeners. It was at about 13.5 to start the show, and it's at about a 1340 to end the show. So coming in a little bit, I had a 12.25, so no joy for me last week. It was myself, it was the Rock Lobster, and it was Matt from ORATS on the show to end the year last year. I was at 12.25, so no joy for me. Andrew coming in 1265, so no joy for him. Matt was the closest at 1380, so he's about 0.4 points away right now. So obviously not a winner, but at least respectable, more respectable than the rest of us. And so looking at, our producers will go through the guesses. Oh, we had 13.5. Oh, that's a guess for the end of the year. Otherwise, he would have been a bullseye here for Z2313. So
that's what he meant.
That's what he meant. Yeah, he meant it for there. We also had guesses. We had a guess last year for the VIX average for the year. I think you wanted us to do this, Russell. So you guessed 19.5. The Meatball guessed 2112. I guessed 2067. I have not crunched that number, so I have no idea what the actual average for VIX. I'm guessing it was not a 21, though. We shall see. But that said, Mr. Rhodes, our guest last week was the closest, so I'll allow you to choose. Do you want to go first or do you want to go last?
I want to hit that button and say, I want to go first.
All right, go for
first. I get the first guess of what's going to be a historic year. Full week, blah, blah, blah. Got the week from Monday off. 1324.
1324 for the once and future crack smoking, machine gun toting,
right,
Dr. VIX and Mr. Rock Lobster. No crack for you, but you got the machine guns firing out there as well. What's catching your eye out there for VIX for next week, sir?
Russell said 13. I don't want to scum them too badly, but I'm going to go 1290.
1290. I had this number in my head right now, and it's just it won't go away. So 1367 is what I'm feeling for this time next week. So there's your vol market. Let's look out here. We got 14 quarters in our chats. 13. Oh, here comes options queen. She's usually pretty good. She's at a 1380, so she's coming me to the upside, which is interesting out there. Get your votes in the chat. If you're listening after the fact, get them in on the ways I mentioned earlier, listeners. And then you too can win. You don't have to wait all year for the vol prize. That's the big one. But you can also win fabulous prizes every week here on the show. Just get your vol picks in. And then you too can win the crystal ball and perhaps win fabulous prizes. That is going to do it for us here for Vol Views for this week. If you're listening on the on-demand side, I want to thank you for joining us to start your new year in high style with some machine guns and maybe a crack pipe or two out there. Of course, I hope your new year is going well. If you're listening on the pro side, hang out in the live. We'll be back in about an hour to break down all the madness out there on the options oddities front, so stay tuned for that. Of course, if you want to join the pro listeners and you don't want your week to end with vol views, only one place to go, theoptionsinsider.com/pro to correct that great injustice you have inflicted upon yourself. And Mr. Rhodes, if folks want to reach out to you to question other data that you put out during the week, where should they go? What should they do?
or discuss, different versions of the crack. Twitter's the easiest way to find me. Just my full name, Russell Rhoads. Yeah, two S's, two L's, RHOADS. The correct way to spell that.
The funky way to spell it, but yes, give him a follow on Twitter. I can attest he does put out some good and maybe some infuriating. Maybe you'll get fired up. That's right. His data. There you go. Get fired up with his VIX charts. Give him a follow over there on Twitter if you haven't done so already. And Mr. Option Vol, he's not super active on Twitter. He's mostly retweeting the shows he's on with us, but he can put out a nugget or two when his sheets are working. Mr. Rhodes, or I should say, Mr. Rock Lobster, where should folks find you on Twitter and what you got cooking that they could check out?
I was just now thinking for my next Russell t-shirt, I got Kraken Stats. That's his the next t-shirt.
Kraken Stats. There we go.
Kraken Stats. Russell, just ignore me. Anyway. What do we got? What do I've got going? Oh, optionpit.com. Blah 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 blah. 5 products I manage there, all profitable, all teach how to trade different parts of the volatility curve, as it will, different parts of where a retail trader could find edge and learn how to do that and, put the trades on, take them off. You can do that at optionpit.com. So as much guff as I give Russell, he is excellent with them stats, which is, of course, why it's Dr. VIX.
That's why he is the once and future Dr. VIX. Indeed, of course, you can check out Andrew and all of his vol musings when his sheets are working over there at Option Pit, the place to go to learn more. It is optionpit.com. That is going to do it for us. Thank you to all of you who joined us for the first week of the new year. Back again in about an hour for Options Oddities, then back again on Monday for the old OB all the way through to next Friday, another episode. Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.